What is up, my friends? It is Andrew Gallegos, your mortgage professional, here to talk to you about the documentation that you will need for a full pre-approval. I just made a video that I posted to my TikTok yesterday about fully underwritten pre-approvals and the advantages that those have and some of the benefits of that. And I actually got a couple comments from people that went through the pre-qualification process and said that they wish they had gone through the full-blown pre-approval process because it sounds like they went under contract on a property and then they weren't sure if their closing was going to happen. So it's very important. I preach about this all the time. It's very important when you're in the market for a new mortgage, whether that's a purchase or a refinance, especially on a purchase though, you want to make sure that you are going through the full-blown pre-approval process. And if you do that with a good lender, that lender is going to request a handful of documents from you. Now, pre-2010, before I was in the business, I got in the business in 2010, apparently the documentation requirements were much less than they are, or than they've been post-2010. After the crash in 2008, 2009, a lot of additional much needed regulations came in and the documentation requirements became more. So if you've bought in the past 10 years or so, you probably understand what sort of documentation will need to be requested. If you haven't, this would be a good video for you. Also for first-time home buyers, you know, a good video for you to kind of understand what a lender is going to be looking for. So I'm going to kind of break this down in a couple ways. First, I'm going to give you a list of the documentation that most everybody needs, right? There's 4 of them. There's 4 pieces of documentation that most everybody is going to need to provide to their lender. Now, I'll also talk about some, situations that might put you in the category of needing to provide more documentation to a lender. I will preface all of this though by saying that every pre-approval, every application is a little bit different. So just depending on your specific situation, there might be some documentation that your lender requests that I don't talk about today, and that doesn't mean that they shouldn't be requesting it. It just might mean there's something really particular in your financial situation that needs additional documentation. So with that being said, the 4 main items that you will most likely need. The first one is a copy of your driver's license or passport, photo identification. So most people provide their driver's license, make sure that it's not expired, but that is the first item. The second item is a most recent pay stub. The third item or items are your W-2s from the previous 2 years. And then the fourth is bank statements. So complete bank statements, all pages of at least the most recent 30 days, sometimes 2 months depending on the loan program that you're doing. But this would be for your checking and savings accounts. I always request retirement, 401k, IRA accounts as well. Just even if you're not planning on using those as your down payment or your closing costs, just having them in your file is going to help your file through underwriting, because you're going to show that you have reserves. So it could benefit you in terms of getting an approval through the underwriting process. So those are the 4 main things. Now, tax returns. I get this question a lot. Hey, do you need my tax returns? Depending on the situation, we might. If you're doing a specific loan program that requires them, like a jumbo loan, maybe a down payment assistance type loan, a loan that we have to broker out because it's some sort of a niche program, that would be a case where you would need them. Or on a standard conventional FHA, VA type loan, if you're claiming income from investment properties, from asset or investment accounts, if you're self-employed, then we would need the tax returns. So that would just be kind of based on your situation. And most of the time we'd request the most recent 2 years for your tax returns, and you'd want to make sure that you provide all forms and statements and schedules and pages of your federal returns. Lenders don't need your state returns, they only need your federal tax returns. So that would be the tax return situation. Now, here's a couple other scenarios where additional documentation would be requested as well. One, if you are paying or receiving child support or alimony, at that point a lender would request the court-ordered documentation showing what you agreed on with you know, your ex, you know, how much you're paying per month in terms of alimony or child support, how much you're receiving, etc. So that documentation would need to be provided. And then if you're planning on using alimony or child support, maintenance income to qualify, then you would also need to prove a 6-month history of receiving it. We work with a lot of clients that are just coming out of a separation, and they're going to be getting some alimony or child support, but you can't actually use that towards qualifying unless you can prove that you've gotten it for at least 6 months. So that's something to think about. It also needs to be expected to continue for the next 3 years. So that would turn into qualifying income if it met those criteria there. So that would trigger those requests. And then if you own properties that you're planning on keeping through your the transaction or the loan that you're applying for now, then you would need to supply documentation for those properties showing what sort of debts are associated with it. So if you own an investment property, for example, you'd need to show a mortgage statement. You need to show a copy of your homeowner's insurance declaration page. You need to show an HOA bill showing how much you pay in HOAs. And then you may or may not have to provide a copy of the lease agreement. If you've been renting it out for a while and you're showing rental income on your Schedule E on your tax returns, then you don't need to show a lease agreement. But if you just started renting it out and you want to use some potential rental income on a property like that, you would need to provide a lease agreement there as well. So those are some additional requirements. Another thing too that I'll request from time to time is year-end pay stubs. This is because if you're getting like overtime income, bonus income, shift differential, variable income on top of your base pay, a way that we can average those those types of incomes out over the past 2 years is if we get your year-end your year-end pay stub for the previous years, because your pay stubs on those year-end ones, it's going to break down exactly what you made in base income, bonus, commission, overtime, etc. So we'll be able to see that all broken out, and we'd be able to do an average based on that, as opposed to going to your employer and having them fill out a verification of income and employment form. Sometimes that takes a few days, so we can expedite it if your year-end pay stubs are easily accessible. So that's something that I might throw in there. And then if you're retired, obviously you don't have pay stubs, so in lieu of those, you would have to provide your retirement awards letters from either the Social Security, or if you're getting a pension income, you'd have to provide a letter showing what that income, how much it is per month, and the continuation of it, and whatever details there are surrounding that income you'd have to provide. So those are just a few items that you can kind of plan on having it handy when you go to do a proper application for a mortgage pre-approval. If you have any questions about any of this stuff, feel free to reach out, and thanks for watching the video. Take care.